With the Bitcoin, oh, Bitcoin, that's a hedge against inflation. Yeah, I don't see that working.
Welcome to the Daily Crypto. Today we have one of the most popular personalities in the finance and investment world with us, Mark Cuban. He is here to talk about the macro factors that have caused a downfall in all financial markets and why he is still a firm believer in crypto. So sit back and watch the full video because he is going to make some rather interesting and controversial points, which no other people have made so far on our channel. Let's jump right in.
So what's really changed over the past 15 months is, we were looking at DeFi. There was the DeFi summer, then there's DeFi, and, but there was really DeFi on just a couple blockchains, right? Mostly Ethereum is where all the action was. And there was a lot of subsidies. It's like people were approaching crypto and DeFi in particular, like they did software applications, where there were, back in the day, VCs would subsidize apps or applications and offer them for free, and knowing that they were losing a boatload of money just to get users to try it. And we saw that with DeFi as well, where, on Aave, wherever you went, there were all kinds of rewards that were just handouts that somebody had to subsidize. And that subsidy was coming from investors, they were coming from, misperceived tokenomics, or they were coming from, just buyers who were just wanted to play the game, trying to earn as much, just trying to go as degen as they can. And, what we've learned since then, you go to Aave now and you see what the real rate should be. And it's all algorithmically driven without the reward. And once you took out the rewards, the whole perception of DeFi changed. And I think that's also one of the reasons why DeFi has kind of survived a little better than CeFi has survived, because CeFi is a centralized business, has tried to run with rewards more and subsidies more, and that catches up to you real quick.
Cuban talks about how DeFi has survived for a relatively long time now, which could mean it's here to stay. It's important to note that many crypto projects were losing a ton of money by offering users free tokens just to get them on board and give them a glimpse of the DeFi world. Now that the world knows the potential of decentralized finance, they're not going anywhere.
Look at the stock market. It's gotten, tech stocks in particular, high growth tech stocks have gotten torched even worse than crypto, right? Yep. I got tech stocks worth down a whole lot more than my Ethereum or my Bitcoin, or my Polygon, right? They've just gotten torched. Why is that? Because it went too high. When interest rates are basically negative and you can get as much capital as you need, or some people can get as much capital as they need to go out and buy stocks thinking they're going to go up, why wouldn't they? You're borrowing at, let's say, 1%, and do you believe stocks will go up 1%? Sure. So yeah, it was $50 a year ago, but it's $300 today. So what? Everybody's doing it. It keeps on going up. Why would it go down? Well, you get to the point where it's just too damn high. Just because it's down 80 or 90% doesn't mean it's mispriced today. It may mean that it was mispriced last year. And with a lot of this, that's what it was. The money was so easy, it was so available that prices went too high. And it may well be that even though we're down, enormously, that we're in the right place in terms of pricing, and we're finding the right place. And the problem isn't now, the problem was last year in the easy money.
With the recent hike in interest rates by the Fed, people no longer have access to cheap money with which to invest in tech stocks. Mark says this is the reason why tech stocks went so high, because people kept buying. Now that interest rates and inflation have climbed significantly, the markets aren't seeing capital inflows like we saw last year. This is the reason why all financial markets are down at the moment.
Then there's the Bitcoin maxi side of it. With the Bitcoin, Bitcoin, that's a hedge against inflation. Yeah, I don't see that working. I always analogize Bitcoin as it's a better version of gold. It's a digital version of gold, and I truly believe that. And all the gold maxis think it's a hedge to inflation. Yeah, not so much. If that were the case, gold wouldn't be wherever 17,000, 18,000, wherever it's at, it would be 30,000, And so there was a lot of hope that Bitcoin would do this or that. Now, where Bitcoin and gold do offer a hedge is in countries that are not reserve currencies, because the world uses the dollar.
This is where it might get a bit controversial. because Mark believes Bitcoin is not a hedge against inflation, even though it's a better version of gold in a digital form. He says there is way too much speculation, which in turn is damaging the overall crypto space. He also says that Bitcoin can be beneficial for those countries that don't use reserve currencies.
If I had to buy one today for a month, I'd probably buy Bitcoin, because there's not that push of applications right now. I mean, I'm trying to invest. If you got one that, is a business application that replaces not just fintech, but let's just say something you do in the office. Here's the way we've been doing it. I use this app all the time, and it has nothing to do with fintech. It has nothing to do with collectibles. This is just, I'm using smart contracts on Ethereum or whatever blockchain, and it's made my life a lot more efficient and a lot better. When those start to happen, whichever blockchain they're on, bam, right?
Even though some of Mark's previous statements show that he's more of an Ethereum fan, he says that he would rather buy Bitcoin for the short term because of the applications it currently supports.
I mean, look, I've been broke and sleeping on the floor. I remember having $30,000, and a lot of that was bam, gone. In my company, I had literally $84,000 in the bank, and my receptionist stole $82,000 of it.
What?
So I get a call from the bank. This is my company, Micro Solutions. $84,000 in the bank. We only have 4 employees. One of them was a receptionist, and one of her jobs was just to take the accounts, our payables, right? Put them in an envelope, take them to the post office, and mail them, and then answer the phone, yada yada, right? That was her job. I get a call from the bank. Mr. Cuban, yes. We have this young lady who just drove through the drive-in, and she had these checks that she was cashing. She had taken the check and whited out the payee and wrote in her name. And I'm like, you didn't cash them, did you? Yes, sir. We're a bank. That's what we do. 82 of the $84,000 I had, gone. DOA, gone. And we had to work with all those vendors, and it took us well over a year to pay them back, just to get back to ground zero with them, and break even. And so, look, I've been there, and that fear and agony of what you're going to do next is awful.
Mark shares a personal story about how he lost 97% of his bank balance to theft. Even though it took him another year to make things even, he didn't give up. This message applies to everyone who has lost a lot of money during these tough times. Difficult times don't last very long, so keep your spirits up. Do you think Bitcoin is a hedge against inflation, or you agree with Mark? Let us know in the comments. Don't forget to like this video and subscribe to our channel, because we are on a mission to provide great value to people involved in the crypto space. That will be it for today's video. Thank you so much for watching.